Welcome to Thriving with Your Money Tree. I am Mariann CFA, and I'm happy to share my learnings with you about investments and how to get started in them or continue your journey with them. Today we have a question from one of our podcast listeners, Christine in Michigan. Welcome, Christine.
Hey, Mariann, thanks for having me.
Glad you could make it.
Yeah, hey, I've got a question for you. So, as part of your mosaic style investing, do you use any charts or technical analysis? And if so,
I certainly do.
What are your favorite tools?
Okay, so one of my favorite tools is Thinkorswim. And this is a service provided by TD Ameritrade, which is in the process right now of becoming acquired by Charles Schwab. So the nice thing about this tool is that it has lots and lots of tools within it. And I'm just going to restrict the discussion today to the charting tools or technical analysis. And I'm going to try to keep it simple because I always think that's a good starting point. And if people want to get into it more thoroughly, there's lots and lots to learn on this topic. I understand that you're a teacher, is that right?
That is correct.
Okay, and what grade level are we talking about?
Second grade.
Very good. So pictures, I imagine, at the second grade level are very important to help explain things to kids. Is that right?
Yeah. We use pictures, visuals for everything.
Okay.
Any lesson, yes.
This program offers a desktop trading platform, and now I'm quoting from their website, with industry-leading trading tools, streaming real-time data, and powerful analytics, all customable to you. Now, again, that takes some time and effort and understanding, but it's really, it could be extremely complex if you set it up that way, or it could be extremely simple. And my favorite part of my favorite tool here is the fact that it's free.
Oh, yes, free. That's my favorite price.
Look at these charts. You're basically looking at pictures to show trends. And if you open an account with no minimum balance at TD Ameritrade, or once it becomes Charles Schwab, you will have access to Thinkorswim. I'm not promoting TD Ameritrade, but I will say that their cost to buy or sell stocks, ETFs, preferreds, real estate, and other securities, some other securities, is zero. So again, that's a good value proposition as far as I'm concerned.
Yes.
Okay. Now, when you go into the Thinkorswim program, you will find a tab for charts. So you click on it, and toward the far side on the charts page, you will find studies. And you hover on studies, and you'll have a drop-down menu. You choose Add Study. There's a number of choices, and to start, I recommend Edit Studies. So you want to remove anything already in there. It might be preloaded with some sample thing, but you want to remove anything that's already in there. Now, on the left side in the column, you enter like a search word, MOVAGTWOLINES. So it looks like MOV, AV, 2 lines. And you click on Add Selected at the bottom left. Now you will see a setting wheel at the right side of that entry. the right side of the box. Now you want to hit the drop-down menu on
Okay.
and choose close. And on the fast length area, enter the number 45. On the slow length, enter 180. And you're probably asking, what in the heck does all this mean? Well, you're looking to create trend lines for any stock you want to look at. And usually people talk about 50-day moving averages and 200-day moving averages, 50 and 200 days. So one is the longer term and one is the shorter term.
Okay.
Those numbers, I think it's more advantageous to use 45 and 180. So that's me. Now, the average type should read simple. Okay. And below you'll find some color choices for the fast AVG tab and the slow AVG tab. And all I recommend is you choose two very different colors, like orange and aqua, for instance. And don't use red or green, and I don't know, maybe use yellow and purple, something two very different. So next you hit OK at the bottom right of the box. So far, so good, right?
So far, so good. Yes.
Okay, so you've got your moving averages now, or trend lines. Now in the left side of the column, type in capital MACD with WITH prices. MACD with prices. Hit add selected at the bottom of that left column. Now you want to hit the drop-down menu on price and choose close. So you're getting the closing prices each day on these things. And then in the fast length line, enter 12. And on the slow length line, enter 26. Now toward the bottom, hit save as set and name your set. For instance, my simple charts, and hit save. Hit the OK down below toward the right side of the box and also apply. Close the edit studies and strategies box using the X in the upper right corner of the box. That's enough to get you started. Are you with me so far?
Great. Yeah, I sure am.
Okay, all right, then let's go forward. Now we've got a chart in front of us, and in the upper left corner, we're going to put in the ticker LLY so we can take a look at Eli Lilly's chart. And when you look at that chart, you will see that the prices were moving up and to the right. That's what we want, prices going up over time.
Yep.
But then the company got approval for its diet drug, a diabetes drug that's supposed to take somewhere in the range of 20 to 25% off your weight over the course of a year.
Ooh.
Also sounds like a pretty good idea. And there's an estimated $55 billion in revenue for the pharmaceutical industry for such a diet drug. Okay, so it's a real big deal. Now, see how the stock has taken off from around the $300 per share area in early March. You can see the dates down at the bottom of the to about 450 as of late June. This thing has been on a tear. Note your 45-day moving average line was wavering around the longer term trend line in the spring, then it crossed to the upside around April 20th. And that, Christine, is called the golden cross. When the shorter term trend line crosses the longer term trend line to the upside, good things lie ahead. That's what it's indicating. So if you were using 50-day and 200-day moving averages, you probably would have waited a few more days to buy the stock and it would have been higher. But I like the
Okay.
45 and the 180 day just for this reason. It gives you an indication that something's about to happen before it actually happens, and a lot of people dive into it. So that's the story on Eli Lilly. Uh,
Yeah.
I'd also point out that I've included support and resistance lines for this chart. You'll hear people often on CNBC or Bloomberg or Fox Business News talking about support and resistance. So you can see that there's support where the stock seems to have been going up, and then it had little pullbacks, and then it goes up again and little pullbacks and up again, but it always had support around a certain line, around a certain price. So that's kind of the bottom in that area over the last, call it 12 months. And then there was a point of resistance where it would run up to a certain level, hit it, and then come back, and run up a little more again and hit it and come back. And they kept hitting that same price, but then coming back. So that's your point of resistance. Okay. And,
Okay.
you know, day traders are watching this very carefully. I'm not encouraging anyone to become a day trader. I'll just say that when it breaks through resistance to the upside, it typically means the stock is going higher. And it's not just because of the chart, it's probably like 95% related to the fundamentals, news in the company, what management is saying, what the analysts on Wall Street are saying about it. And conversely, on the support side, when it's hitting those lower numbers, but it doesn't go through, you know, it's because of fundamentals, basically. That's why it's getting support. People are going back to their spreadsheets and looking at their numbers again and saying, it shouldn't be trading down here. We should be buying it at these support levels. So you've now learned about the short-term trend line, the long-term trend line, the golden cross, support and resistance. So that's a pretty good start.
I'd say so.
Well, okay. I also want to point to the second set of information that's on this chart, the next little chart underneath the price chart. And that's those blue lines that are showing how much volume takes place every day. So if you see a time when it falls and big volume, you know, somebody's more than one, investors are upset about something and they're dumping the stock. And conversely, when you have a big volume spike on the upside or consistently higher volume on the upside, that means the word is out, good things are going on, and there's a lot of trading activity going on in the name to the upside. Okay.
Okay.
And then the next line in there, it says relative strength. So your relative strength line is telling you how the stock is doing compared to the overall broader stock market, which we use the S&P 500 index as a US stock market overall kind of look. So you can see for quite some time, probably going back to last, what is that? Last summer, last fall, it's been outperforming. It's been climbing up and to the right. It's been doing better than the stock market most of the time. And then the final one at the bottom is your MACD lines. And these are indicators as to how the price is performing. Again, on a shorter term basis and a longer term basis, I pay more attention to the blue line that tells me what's going on shorter term. And these are good for trading decisions when you're ready to trade, or you think you're ready to trade, and maybe you shouldn't.
Sure.
But it's telling you about the price momentum of the stock. Okay.
Okay.
So where will this stock go next? Interestingly, young kids can see the trends in these things. So put that in front of your second grade kids and ask them, where do you think it's going next? If they're just looking at the stock price. And generally,
You bet I will.
They can see it. It's like they don't overthink it.
Yeah, they just go with it.
They go with it. So the next one that we're going to look at is for Moderna. There's a name that's been in the news for about the last 2 or 3 years in the headline,
Yep.
right? And
Mhm.
look at this one, you can see, boy, has it come down from its heyday quite a bit. You know,
Yep.
it's like, does anybody need a vaccine? How effective
Mhm.
are the vaccines? It's all put pressure on the stock price. And so it's been about cut in half. And if you actually enlarge that top chart, and you can do that by just putting your cursor on the bottom line of the chart and dragging,
Okay.
then you can see, you know, the fluctuations more easily. But what you will see is that it had a golden dagger a few months back. Okay, when again that shorter term, more volatile line crossed the longer term trend line to the downside. And typically, once you have a golden dagger, things go very poorly for the stock price. Okay, so when we look, there's been very little volume. It is, if you're looking for blue lines on that next chart, again, you can expand that by just putting your cursor over the bottom of the volume part and dragging it down. You'll see more. But the next line is that relative strength. So to compare against the S&P 500, it used to be doing great. You know, look at the range. And now it is
Yeah.
just awful. So does that mean I would sell at this point? Well, I tend to look at these things as being, okay, it looks washed out. Okay, I might be wanting to buy this. And again, if you look at that MACD line at the bottom of the page, and again, expand it so you can see it more clearly,
Okay.
but it looks really, really washed out. So as a portfolio manager, I would be putting my investment analyst on this name and saying, dig in, tell me about what new products they're working on, what's the value in the marketplace if they're successful, and what's going on with management. Have all the key people left? Maybe not. You know, maybe the key people are still there doing their work that they do. But yeah, dig into the fundamentals and let's see if this isn't a buy.
Oh,
Or it could be the market is telling us it's going to zero. I don't know at this point in time. I'm just saying this is how you look for
right.
new ideas. Okay, overall stock market, the S&P 500. And
Okay.
I've been using 2-year charts so far in our discussion. That's what I recommend people use, a 2-year chart. And what I see here, first of all, I'll point to the yellow line, is that since last fall, the stock market has been on a very positive trend line.
I see we've got some big dips here.
Yeah. We've had, you know, a pretty volatile market. Things were going down last year, primarily because interest rates kept getting raised by the Federal Reserve. And, you know, everyone's concerned that they're going to cut off the economy's growth. And, you know, there was pressure on those stocks. If we're just looking at that part of the chart from last October forward, we can see that the stock market has been on a general uptrend. So that's that yellow line that I put in there from the bottom to current. And in January, we saw that shorter term trend line cross the longer term trend line to the upside. So that's your golden cross. And it hasn't been a smooth ride since that time. We've had some pullbacks, but overall earnings estimates are rising for companies, and we're not in a recession yet, as not everyone, as a lot of people had predicted. And so stocks have been able to move higher. Of course, the Federal Reserve stopped putting pressure on borrowing in the economy when they stopped raising interest rates a couple of months ago. So this is you know, your chart of the broader market over the last 2 years. Now I'm going to shift to the longer term trend, and this is long. This is going back to the start of 2000.
Okay.
Okay.
And I see we've got some big dips in here.
Yeah, we've got some real big dips in here. And the first one came with 9/11, you know, when the,
Oh, sure.
yeah. So the next big one I would point to is the financial crisis in 2007 to 2009. Again, you know, it put pressure because corporate earnings were going to go down. The economy was forced to go down. It was very tough times economically in the US. And then as we go further along, we run into periods of time where we had COVID. So
Right.
COVID was a big dip in March of 2020, but you can see we recovered very sharply. So when you look at longer term trend lines, you could see it's up and to the right. It's going in the right direction. It's driven by corporate earnings and economic growth and good valuations. But there are times when you need to put your finger over the chart so that you're not distracted by something that was a one-time event or a temporary type of thing. And you may run into periods of time like 07 to 09 where you have to use two fingers and fatter fingers than I even have, just to block out what was not part of the trend. Okay, and see how things are going up and to the right. And that's why people invest in the stock market, because it typically goes up over time. And in fact, 75% of the years are positive. Okay, going back to 1926.
Wow.
Yeah, so 75, if you could put money on the table at some gambling, you know, choice, and you thought your chances of making money were 75%, I think you'd be at that place for a long time.
Yes.
Okay. Okay. Agreed.
I like that.
Oh, you like that? Okay. So, I've shown you some basic charts, and hopefully it will pique your interest in learning more about technical analysis to add to your work that you do in fundamental analysis. There are other offerings from Thinkorswim, including a Market Watch tab where you can just enter in the tickers of companies maybe you're interested in or you already own, or you just want to track something like alternatives or bonds or industrials or, you know, healthcare, something like that. So that's another service right in there with the charting. You can add on so many things. You can add on an all day, all night feed from their own TV station. You can have a feed of headlines from around the world. You can have little charts off to the side. There's a whole host of things you can do with it. But here's the important thing to me. And that is that while it's good to have a toolbox, make sure it's small and not too cumbersome. It will help with your decision making. So again, there's many other offerings at Thinkorswim, and you can best access them with this link, and that is tlc.thinkorswim.com/center/how-to-tos, that's HOWTOTOS/trading how-tos. So if you catch everything I spoke of today, they will guide you through. And,
wow. Well, thank you.
Well, thank you for asking the question. Are you ready to dive into Thinkorswim?
I think I'm ready to dive in. Yes, to Thinkorswim. Thank you, Mariann.
You're my pleasure, and good luck.